Good morning. It's Friday, the 11th of October, and this is Govindraj Ethiraj, headquartered and broadcasting as well as streaming from Mumbai, India's financial capital. The Take. In 1999, Tata Motors was on the verge of selling its passenger car division to Ford Motors after the Tata Indica, launched a year earlier, stumbled. The follow-up discussions at Ford's headquarters in the United States didn't go too well. According to one account, Tata Motors officials, which included Ratan Tata, were insulted by some of the apparently disparaging comments about the company and the car project. The late Ratan Tata returned to India from that meeting more determined. 8 years later, roughly, Tata Motors bought Jaguar Land Rover from Ford. Back to the Tata Indica. The problems were mounting. Complaints about the engine and high noise and vibration levels in the car were pouring in. In some cases, customers apparently even turned violent. And this was a diesel car, by the way. Sales dropped, and in 2000-2001, Tata Motors announced a 500 crore rupee loss. The company had already invested about 1,700 crores in that project. The blame landed on Ratan Tata for thinking too big. Ratan Tata called an emergency meeting at Taj President in Mumbai's Cuff Parade to take stock. Team members were encouraged to speak freely, and going by accounts, there was more self-criticism than blame. The net result of that meeting was that a massive retrofit repair exercise was launched for some 45,000 Tata Indica cars, with 45 parts being replaced free of cost. Customer meets were held and they were heard out patiently, and feedback was collected. And then a new car was already being worked on. The design saw some changes, and a Tata Indica V2 version 2 was launched in 2001 later, which went on to do what the original car aspired for and much more. Ratan Tata would return with a 1 lakh rupee nano car in 2009, which once again ran into problems both internal and external, which in some ways were more serious because eventually the project was wound down. There are many aspects of Ratan Tata's personality at play here. For one, his audacious goals, which stretch way beyond most entrepreneurs would even dare attempt. Remember, product entrepreneurs are rare in India. I do recognize that software products are also products, but this is not the same league. It takes some gumption and courage to attempt a product that has to prove itself day after day on the roads of the kind we have in India. Third, if something does not work, you have to trust the teams you have entrusted the build to in the first place to find solutions. That takes time, trust, and patience, particularly at a time when time is running out in the marketplace. And finally, when Tata may have got credit for the group's many successes during his active tenure, he never really sought the limelight, and his colleagues, whether in cars, software, hotels, or steel, always felt a sense of constant ownership, and that appears to last even much after they have left the company, mostly through retirement. Tata, of course, set a trailblazing path with a globalization vision, and then the global acquisitions of brands like Jaguar Land Rover, Chorus, Daewoo, and Tetley, amongst others. That was another aspect of the vastness of his vision to grow and succeed. But all arose from his desire to take on bigger challenges. All Tata employees and acquaintances speak of Ratan Tata's humility and alignment with the traditional Tata Group principles of serving society along with creating value for shareholders. His tenure has ticked all boxes and much more. In this time of confusing definitions of entrepreneurship and success, his life and career offer important insights into the true nature and role of entrepreneurship, of the kind that shapes not just companies, but also nations. And that brings us to the top stories of the day. The stock markets edge up again as both internal and external cues stabilize. Oil prices fall as stockpiles increase. TCS results are out, net profits down marginally quarter on quarter. Inflation is set to rise for September. And anecdotes and leadership lessons from former TCS Managing Director and CEO S. Ramadurai on his time with Ratan Tata ahead of a special edition that's coming on Saturday, October 12th.
This is the Core Report with Govindraj Ethiraj.
The stock markets stabilized once again. The stock markets edged up once again on Thursday as both external and internal cues were well stable. The BSE Sensex and NSE Nifty ended in positive territory, with the Sensex rising about 140 points to settle at 81,607, and the Nifty 50 closed at 24,998, up about 17 points. One reason for sentiment generally being positive into trade on Thursday was, of course, Wall Street, which was back to its record highs. On Wednesday, the S&P 500, the Nasdaq Composite, and the Dow Jones all closed at record highs and are looking steady going into trade on Friday. It was the S&P's 44th record in 2024, with tech shares leading the way, including Apple. Alphabet fell about 1.5% on news that we also spoke of at the Core Report yesterday about the United States weighing a Google breakup in a historic big tech antitrust case. Oil prices are down. Oil prices were steady but quoting below $77 a barrel, having fallen sharply on Tuesday following cues from China that there may not be any more stimulus packages. The markets as a whole are obviously expecting more. Elsewhere, US crude inventories were up. Official data from the United States government showed the country's crude stockpiles increased by about 5.8 million barrels last week, and that's a smaller build-up than the 11 million barrel gain projected by an industry group on Tuesday, according to Bloomberg. Another sign that the Middle East tensions are showing no signs of easing up. Latest reports indicated that Iran is prepared to launch thousands of missiles at Israel and target economic sites if it's attacked, according to Bloomberg. But the major concern on the demand side continues to be China, the world's largest importer of crude. Meanwhile, Morgan Stanley has raised its Brent price forecast by $5 to $80 a barrel for the fourth quarter of this year on heightened geopolitical risk. The first major IT results are out. Tata Consultancy Services has posted a 1.1% quarter-on-quarter fall in net profit for the second quarter, that's ending September, to about 11,909 crores, and that's below street expectations. Revenue from operations for the second quarter rose to about 64,259 crores. Remember, this is a quarter. A money control poll of 10 brokerages had pegged TCS's July to September net profit at 12,420. And remember, it came in at 11,909, so marginally lower, and revenue at 63,938, so which means that the actual revenue posted by the company was higher than estimates while profits were lower. TCS also declared a second interim dividend of 10 rupees per share, and it had paid an interim dividend of 10 rupees on 19th July this year. Revenue growth, the company said, was led by energy, resources, and utilities. It also said it added about 5,700 employees on a net basis in the September quarter. Now, this is the second quarter that headcount has risen after declining for 3 straight quarters. Earlier, its headcount had risen for some 19 years non-stop, which would have been roughly the case, or maybe more, with other IT companies. And last year to this year is the first time we had seen a reversal in headcounts. So the Tata company has now added 5,500 employees sequentially in the June quarter. So that makes it about 11,000 employees this year, or this first half of 24-25. TCS now employs about 612,000 people, or 6 lakh people. And that makes it potentially the largest employer in the country. So that's, of course, in the private sector. Attrition levels for TCS stood at 12.3%, slightly up from 12.1% in the previous quarter. Of course, this is much lower than what it was in that COVID period where attrition levels had gone completely haywire for the entire IT sector. Hyundai's mega IPO, will investors bite? So everyone's talking about the biggest ever IPO from Hyundai Motor India, as the company plans to raise about 28,000 crores through the offering, give or take. The IPO is structured as an offer for sale where almost 140 million shares will be offloaded by its parent, that's Hyundai Motor, which looks like the company will not receive any proceeds and the entire money will go to the parent company, raising questions about whether the IPO is really worth it. So the price band is 1,865 to 1,960 per share. It will open for subscription on the 15th of October and close on the 17th as things stand at this point. I reached out to Abhishek Gaoshinde, Deputy VP of Research at Sharekhan by BNP Paribas, and I began by asking him how he was seeing the IPO.
If you see that Hyundai's IPO is giving us an opportunity to play with an MNC theme, one. Two, it is simultaneously giving an Indian investors to play on the pure PV play, given that currently only we have one player, that is a Maruti Suzuki, which is a pure PV play. Others like that Mahindra and Tata Motors are the conglomerate. Third is that it is the second largest player in the domestic market. So it is giving us an alternative that we can play. If we do not want to play with the Maruti, then we can go with this Hyundai. And here we do not have to compromise on anything. Say, for example, if we want to play with a passenger vehicle segment and we do not want to play with a tractor cycle. So that is the case currently, that on some point of a time as an investor, we have to compromise that. We have to go with some other businesses also. In that terms, it is giving us an opportunity to play on the pure PV play.
And how do you see the nature of float, which is an offer for sale, which means there's no money that looks like it's going into the company for future investment and so on?
what we can say that it doesn't require so much kind of a fund because it has been generating healthy cash. So ideally, it does not require a fund. If you see its objective, what they have mentioned in their RHP is that they are coming out with this OFS mainly to get the benefit of listing into the stock market. So I don't think that should have to be seen as a concern because it is giving an opportunity to play to the investors.
Got it. And how do you see the overall performance, Abhishek? Like, for example, I know revenue and profits were both up 16% and about 30%. That's profits 30% for the year ended 31st March 2024. And how is that looking vis-a-vis other companies?
The direct comparison will happen with the Maruti Suzuki. So compared to that, it has around 65% kind of its volume coming out from the UV segment compared to for if we see that for Maruti, it is roughly 40% of its passenger vehicle volumes is coming from the UVs to around 21% of its volumes coming from the export markets. So because of these two things, its ASPs are substantially higher than that of the Maruti. And with this higher ASPs and the consistent market share of 14 to 15% for last 2-3 years, its EBITDA margin has been slightly better than that of the Maruti, which is again percolating to the profitability margins or the return ratios. Second thing is that it has a slightly premium appeal compared to the entry level products, and that is helping it to be some kind of a dominant space in its addressable market segments.
So the price is at about 1,865 to 1,960. Now, my question is not whether it's a good or bad price, but generally, how does this compare in terms of earnings and any other ratio that you'd like to use with other car companies?
For example, at this point of a time, we can't talk much about its future estimates, but roughly, if you can say 10-12% kind of a CAGR, if you assume for next 2 years, then the stock would be available at 21-22 times of its FY26 earnings. And currently, Maruti is also trading at 20 to 23 times of its FY26 earnings. So, in terms of the valuation, it appears to be at par. And even if we talk about the FY24 numbers, then at FY24 numbers, it is available at 26.3 times compared to the Maruti, which is available at 30 times. So Maruti, which has a 40% kind of a market share in the domestic market, having market cap close to 4 lakh rupees, it has a market share of 15% and coming out with an IPO at a market cap of 1,59,000 rupees. So if you go by market cap to market share metrics, even in that way, valuation wise, it appears reasonable given that the currently PV cycle itself is in the downturn.
And how is the overall passenger vehicle market looking to you, Abhishek? I mean, we've been reporting the numbers here and talking about the numbers on the core report. Dealer inventories are high. Only some segments are doing very well. Other segments have slowed down.
So beyond that, what is more important to take into highlight here is that Mahindra Rocks has received over 1,70,000 units kind of a booking in the initial hours only. So it says that the demand is a product specific. One, two, the demand is continuously moving towards the UV side. Three, the demand is much higher for the newer products compared to the older products. And on top of that, we are sitting on a very high base. So it was expected at the beginning of year also that in this year we will see some kind of a moderation in the overall growth, and that has been still continuing the expectation. What is more positive would be in this festive season is that if this inventory would be clear out, then even that would be considered as a big positive for slightly positive for this PV players.
Right. Abhishek, thank you so much for joining me.
Thank you.
Inflation set to rise again. High vegetable prices are back to haunt the Indian consumer, it would appear. The October 3rd to 9th poll of 48 economists run by Reuters had predicted that retail inflation, as measured by the Consumer Price Index, has now gone past the 5% mark to 5.04% for the month of September, as compared to 3.6% in August. Forecasts were wide and they ranged from 3.6 to 5.4%. The inflation numbers will be released on the 14th, which is next week. Food items, particularly vegetables and other perishables, make up for a significant share of overall household spending in the country, and these saw an uptick in prices because of heavy rains, which reduced the availability of essential crops, says Reuters. A high base from last year, which helped bring down inflation in July and August, became a lower base last month, having the opposite effect. And interestingly, the 5.04% mark has also crossed the Reserve Bank of India's 4% medium term target. Ratan Tata, a special. There are many aspects of late Tata Group chairman Ratan Tata's vision, leadership style, and personality which are now emerging in greater detail as those who've worked with him share their experiences. The core report is presenting a special edition on Ratan Tata, businessman, entrepreneur, and philanthropist, as seen through the eyes of some of his closest lieutenants in good times and not so good times. Tune in for that edition on Saturday, October 12th. Meanwhile, as part of interviews for that series, I spoke to former TCS Managing Director and CEO S. Ramodarai, and I asked him to share some of the anecdotes from his stint, one which saw, among other things, the famous listing of the TCS stock just about 20 years ago.
I think every interaction with Mr. Tata, traveling with him, was a learning experience and more in terms of a friend or a professional rather than a boss versus an employee. We traveled together a lot even prior to the IPO, after he took over as the chairman of the group, as well as I became the CEO of TCS. Some of the anecdotes are we went on a trip to Latin America and we took a very interesting route that is from Bombay to Joburg and then Joburg to Sao Paulo non-stop flight. I think lo and behold, it was on a Sunday we decided to leave Bombay, and then as we landed in Joburg, as we go into the immigration counter, the people say that to Mr. Tata that he cannot get out of the immigration. The reason he was very perplexed, and I got my clearance and I was about to go out, then I saw him not able to make it. Lo and behold, we found that his visa had expired. There's no way we could do anything to get the visa process done on a Sunday. And as I come out of the immigration to the baggage area, and then the people wanting to greet us from Tata Group in South Africa, they got one bouquet for me, one for Mr. Tata. That I told them was that give both the bouquets to me because Mr. Tata is stuck inside and he's not able to come out. I had a nice room, a shower right in the airport, whereas he had to have a dry shower in the bathroom for the last almost 6-7 hours. There was an incident where we both laughed it, but it was a very experience where he never got irritated, started scolding his people or whatever it is. But mistakes can happen by anyone, any place, anywhere, and you get to face some of the situations with a colleague or with a friend, and that was the lesson from that. A similar anecdote, but I thought I'll give this one, which is stuck in my mind for on the time. And I keep reminding him once in a way when we had joked together, saying that we remember the trip.
Right. So the other question is to do with more on the leadership front. I mean, instance where you felt an action of his or a statement demonstrated leadership, which is generic and all pervasive in a way, going beyond just a company or a business.
His whole quality of leadership was always excellence in everything. And excellence has no bar. You keep raising the bar from your previous experience to the next experience. And by challenging that, whether it was in Tata Motors with the nano car or in TCS with the Tata Business Excellence model to achieve the score of 600 plus, his behavior was the same where he would challenge saying that I definitely want this to be done. A similar situation is when we had done the IPO and the first quarter of results we had to disseminate. He was very particular that I will not have anything other than 16th of the end of quarter. He had to publish the results. We said it's a horrendous task with all the subsidiaries. I don't know what you do, but I want that to be done because they had to claim our number one place with the IPO where people would know what this company is and it will all beat all the benchmarks. Same thing when that nano car and we had gone to Delhi together and I happened to be there and I attended the inauguration or the launch of the nano vehicle. And the leadership is where a person across the spectrum, the moment he saw the joy of launching that product, he came and hugged me, which is very unusual for a person, a group chairman to come and say that I could see that moment of team spirit and the moment of being together. almost tears in his eyes to see a product of his vision came out, and here is the launch that was happening. So I think these are instances where you again remember the man for what he is rather than what people claim him to be.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.